Okay, good morning, folks, and welcome to a quick morning update and member stock chart request for February the 5th. Let's begin with the E-mini futures. Let's pull back to a weekly chart here, and we'll drill down. So if one were to ask me, what's the most important observation that you have to make about this week's price action so far, is that we have a new weekly low versus last week. So trading is not about guarantees, it's about probabilities. So given the fact that we have now made a new weekly low, the probability of a continuation breakdown is pretty good. We spent a good part of this weekend discussing strategy and also reviewing symbols for our members so that they're prepared for this coming week, and I have a few to get to in a few moments. So in short, we continue to build cash. We continue to build a shopping list of great opportunities that are out there, whether they be to the long side or to the short side. But the key is to protect your capital reserves and do not go catching a falling knife. Show patience. The markets will send us signals, and we will be looking for those signals and discussing them on Market Wrap. So weekly chart, week over week, we are moving lower. On an hourly chart, we're very close to taking out the Sunday lows. We were oversold relative to this 3 standard deviation Bollinger Band. We bounced as expected, and now it appears as though we're going to resume the downtrend. Now, the NASDAQ 100 futures, we have, again, a new weekly low. We are rolling over off of an oversold condition. So the path of least resistance, for now anyway, remains to the downside. Now, as far as yields, which have really been propelling this market one way or the other, we're seeing a bit of a reprieve this morning, ever so slightly. Now, this is the 10-year bond price. So the yield trades inversely. So as you can see this morning, we're trading higher. And in fact, if you take your trend line out, you can see that overnight we broke out. And we're very close to a continuation breakout here, which is good for yields. Now, that may put a bid under stocks at some point in time today. Now, on a daily and weekly basis, we remain in a downtrend on the 10-year Treasury note. So let's not get all excited by intraday volatility. What we want to watch are those stocks on our watch list and those indexes that are important to us and our portfolios to see how they close, because it doesn't matter where a stock, an index, the price of tulips, or a cupcake trades intraday. What matters is where it closes, folks, right? So that's all we care about. Don't let the intraday volatility based on headline news or CNBC and whatnot push you into this market. The Dow Futures, same deal as the NASDAQ comp and the S&P 500. We were oversold. We bounced. We're rolling back over again. I have a support level here drawn. Let's drill back, and probably on a daily trajectory. Let's go take a look at it. Yeah. So here is our lower band of support. We're going to hit this sometime today. We're just flirting with it now. I think we'll hit it, and then we should get a bounce sometime this week. I don't know, but probably later in the week. We have a lot of Fed governors speaking this week. Let's check out the dollar. Now, the dollar on a 4-hour chart, we have no breakout yet on a daily chart. Thank God. Now, we were in a trading range overnight, and we broke down below this lower band of support on a 4-hour chart. At current, we appear to be rallying back, which is not good for precious metals. The odd part is that we are seeing a bit of strength in gold, and I'll tell you what this means in a moment, and silver. So what this means is that there is fear that is creeping into the market. Let's bring up the VIX. You can see the VIX on this 4-hour chart is moving higher. So what the markets are saying, and I watched this last night quite a bit when the futures markets opened up, what we're seeing is a correlation, not an inverse correlation, certainly not tick for tick, between fear, meaning the VIX, the dollar, and precious metals. This morning anyway, and overnight, How long that'll last, I'm not quite sure. During Brexit, which is really the last time I saw this happen, it lasted for several days. But believe me, it came to an end. So trust me, seeing the dollar and precious metals move higher together, it's not all pixie dust and lollipops, okay? It's not going to last. Believe me. One will win out. We'll keep an eye on it, and we'll trade in the appropriate direction. Let's take a look at Bitcoin. Wow. Crushed. All right, so we haven't spoken about Bitcoin in a few days, and the reference point I was using, which was support right back here, that's clearly been broken, and look at us now. We're down 975 overnight. Certainly no flight to quality here, as we're seeing with the dollar and precious metals. Now we just went down 1,000, and we're not even at the lows of the day yet. So obviously we have not seen a bottom here. For those folks out there that are looking to buy this so-called bargain on Bitcoin, please, you're catching a falling knife. The markets will send you a signal when you've hit a bottom. If you're looking for guidance on it, join the Contrarian Trader, and we'll work through it together. Let's get to some charts that our members submitted for me to review. Berkshire Hathaway, the B-class shares. A bad week last week, obviously, down 3.72%. So we have two support levels here. One is the invisible lower band of the rising uptrend channel, which we're going to flirt with it today in all probability. Now, where I would really see support coming in is at two places. One, at the 195 level, and below that level at the 180 level. So if you're looking to buy these shares and we break this lower band of support, those are the price points that you'd want to take a crayon out, draw your trend line at, and then look to see if it holds. Not necessarily put a bid out there at that price. You want to make sure that it holds first, right? Because this can get ugly really fast. Remember, we have a new weekly low on the S&P 500, NASDAQ comp, and the Dow Jones. So it's a broad-based sell-off. So nothing's going to be spared in the stock market. Daily chart, we have a lower high, and we have a confirmation breakdown on this daily basis. So what does this all mean? Well, we put in a all-time high on the 26th at 217.62. We pulled back, formed a base, validating the prior support level. We rallied back, and on February the 1st, we put in a lower high at 217.50. Fast forward to Friday, we broke support. Now, does this mean that Berkshire B-class is broken, it's done, it's never coming back? Of course not. There's going to be a point in time where the risk to reward is in your favor. Today is not the day. So if you have cash, sit with cash. If you're long, move your stop up. Volume was very high, so I would avoid these shares right now. They're simply a watch. Silver, weekly chart. Now, I'm long of the USLV. I haven't added aggressively to it. I wanted to, but given the fact that we have been unable to break out above this upper band of resistance, it's held me back. So the discipline by not adding aggressively to a stock, an ETF, whatever, the price of tulips, is that when you get a pullback because the breakout fails, well then any loss is small, it's mitigated. And then when you get the breakout, it's validating your thesis that you're accurate. Now, where would I stop out? If we close down below 1521, we'd have to get out of the trade. And if we break out above 1664, we would look to add. And obviously USLV has different price points, but the charts are going to look the same. Just the volatility and price being different. C-Trip, this is not a bad chart. It's a weekly chart, and it's all that you really need to look at. Because remember, the markets are not in your favor right now if you're looking to buy the shares. The probability of C-Trip moving lower grows dramatically as the stock market rolls over. And you may be saying, Bob, this company may have reported fantastic earnings. The analysts are forecasting $1 billion per share this year in their price targets. How can you possibly not be bullish on it? It's because when the markets sell off, in a correction, everything goes down. And remember that we have all-time record margin debt, and nobody has cash, with the exception of those who are wise and saw this coming and built cash positions. And believe me, there aren't many of them. So what's the game plan here using a weekly chart? Let's begin with RSI. We broke out and we're retesting the breakout point bullish, right? Our stochastics double bottom setup, they broke out above the pivot point, bullish, good stuff. We're in a downtrend. The downtrend is still intact with the exception of one thing. We're putting in higher lows. That's good stuff, but we're still in a trading range. We haven't broken out yet. So the downtrend is still intact. We need to respect it. Now, if we begin to break out above 49.10, well then, you have my attention. When would I stop out? I would stop out if we break down below the lows of the week of the 22nd at 44.45, or if we break out this week and then roll back over, breaking down back into this trading range next week. That would be a breakout point failure or a bull trap. So I'm fairly optimistic on this chart. What you have to hope for is that it's going to buck the trend of the overall markets, and that's no easy feat. And that's it, folks. Let me get this out to you. Members, we will talk tonight on Market Wrap, and I will be in the forum this evening to discuss any questions. Have a profitable trading day.